Hello, guys. Welcome to the ARMR Report. I'm your host, Brett Rosenthal. This show, as always, is a show about stock market investing in what I call the Millennial age. And what that means is we use fundamental analysis of companies, but we combine that with Millennial tools of execution, primarily algorithms. And what we're trying to do here is both educate you on what algorithms are and how they can help you. Very often they get a terrible rap. You hear about them on CNBC or whatever. Everyone talks about that's why the market's down, which is completely incorrect. But more importantly, this is the world we live in. I just put up a new tweet today. You can see, follow my tweets on Twitter, hashtag ARMR Report, ARMR Report. And you'll see that 85% of all trades on major exchanges are passive investing that are run by algorithms. So it is the world we live in. Get used to it and start to benefit from it instead of being afraid of it. That's what this show's all about, to show you how using algorithms that are easily accessible, you can create performance in your account. You can outperform the market averages dramatically. We're going to go over that today. We are recording for you on our website the performance of three of our model portfolios. Interactive Brokers is the affiliation. So our model portfolios are there. Anybody with an IB account can link their account to one of these three model portfolios and immediately start putting the power of algorithms in your corner. Start to improve your performance by protecting your capital, but still capturing upside. And doing it in a manner where it's very relatable, I think. We are doing our research. We're meeting management teams of companies on this trading desk, as we always do. We build our whiteboard of ideas we want to invest in, but we let the algorithms tell us when to add risk and when to take risk off. That's what's important in the millennial market. It's putting algorithms as the major tool in your quiver, so to speak, to help direct your investments. And whether you're a very conservative investor who will go to a huge cash position when there's a risk off signal from the algorithms, or if you're a buy and hold guy and you're trying to hold through the swings, at the very least, these algorithms will tell you when to stop buying and when to add to your positions if you want. And I'm going to strongly recommend that you carry a cash position of some kind when our algorithms say it's important you do that. This is a live trading desk. Those three model portfolios at Interactive Brokers have my own personal capital in them. Okay, so we've got screens all around. I'm in my cockpit. I'm trading and I'm sharing the information with you for half an hour every day from 12 to 12:30. I hope it helps. I put up a question on our YouTube stream right now. I'm asking you guys the question. Do you think this breakout going on in gold and silver is the beginning of a major move higher for these metals, or is it the another frustrating blip up in a 7-year brutal bear market? I'm going to get to that question later in the show. Let me know what you think. You can always type in and answer. So, God, there's so much to get to today. Let's start where we always start. Let me tell you what I want to get to. Today we're going to go over the performance of these model portfolios. We just started to track them for you on our website, rosenthalcapital.com, last month. So it's been about a month. And the outperformance is stunning. I mean, not to me. I'm used to this type of performance, but it might stun you. So we're going to go over why we're there. We're going to explain why our model portfolios are outperforming the market averages by a factor of 4+ just the last month. Then we're going to go over our focus group. We have one long position in our portfolio now, in our balanced and our conservative and our aggressive accounts. Only one long group in the account, and that's precious metals. We're going to go over why, and we're going to go over how we're going to trade them / invest in them. I want to get to our day trading techniques. We use algorithms to help us figure out when to get long. When we have a huge cash position on in our aggressive accounts, we like to try to put some capital to work on an intraday basis if we get the right setup. And boy, did we get the right setup today. If you follow me on Stock Twits, RCM Investing, you can find me there. You can find me on Twitter at hashtag ARMR Report. And I've been telling you this morning what we were going to do on our day trade on the S&P. So I'm going to go over that. So we're going to go over what our algorithms are telling us right now, how we got the performance we got in the last month, the precious metals investment, and our day trading. So let's get to the first part. I always like to start with what the big indexes are telling us. All of our algorithmic investing, all of our risk on, risk off decision making begins and ends with what the 5 big indexes are telling us. Those index ETFs that we trade and invest in are S&P, SPY, the Dow, DIA, the NASDAQ, QQQ, and the small cap IWM, and the momentum ETF, MTUM. Those are the 5 that lead all of our other investing. From there, we will invest in groups and we'll invest in stocks, depending on the type of account we're running. And forgive me when I look off screen at things. I am in the midst of trades right now. I have a huge trade on the S&P and I'm just killing it. So I'm just looking at it, trying to determine if I want to make changes to it and book any profits. I don't think I do. I'm going to let it ride for now. Okay, so nothing has changed. Since the 4th of December, we told you every single one of our indexes were in a cash position. And we told you that for the first time in a couple of years, what happened on the 4th of December got us to go short the market. None of that's changed, although we have covered our short. We think the sell-off is way overcooked. And it's a combination of events at the end of the year that we feel, will dissipate. Partially it's tax loss selling, partially it's a lack of liquidity going into Christmas. And so we just are looking for a bounce back. And so we're just cash everywhere with our long positions in precious metals. So we started off our cash position, for those of you who don't know this and are new to the ARMR Report, which stands for Algorithmic Risk Management Research. Risk management. That's where it begins and ends when it comes to investing in the millennial age. You start with your risk management, you check it again at the end of your decision, then you put capital to work or you don't. The 24th of September, anybody following us on Twitter or watching this show or listening to the podcasts, we said to you, small caps and mid caps are flashing a major warning signal based on our algorithms. Get out of those positions. We went to 100% cash in the beginning of October. Market collapsed. We put on some positions at the end of October for the first week of November. We had those positions on for about 4 days. Got stopped out of all those positions at break even or a tiny loss and went short. And of course, we all know what happened. The market imploded. Nothing's changed now. Since the 4th, we've been in cash since the 4th, or short, which we just covered. So I have nothing new to report there. It's still risk off across the board. That's an investing risk off multi-day signal. Now let's jump to the day trading decisions. When we have 100% cash, or in this case, we're 85% cash, and let's put it this way, we're carrying big cash positions, and the market plummets. What we have is huge alpha. Okay, and what we try to do is capture that alpha every day if it's there to capture. And today's a perfect example. On a day trading front, if we come in on a big cash position and the market's down big in the morning, or this morning gapped up and then closes the gap, we have an opportunity for the day to put a long trade on the big indexes. We can either buy the Qs, the SPYs, the diamonds, the small cap IWM, or we can use call options, which I like to do in the S&P, to put on a long position. So our longer term investing picture is still negative, but our shorter term intraday trading picture is very long at the moment because we have such a big gain from alpha standpoints as the markets have plummeted. So let me try to focus here and give you guys a rundown of what the performance is. If you just look at our model portfolio from the 12th of November when we started to track this, that's my son. Give me 1 second. Son, I'm doing a live show, killer. I can't do it right now, okay? I'll be out in a little bit, okay? Thanks. Back, guys. That's why it's live. It's a beautiful thing, right? All right. Look, my 5-year-old son wants to get on this live stream. Maybe I should bring him in. We could talk presents from the holiday season. Okay, look. The model portfolios on aggregate are down 1.4%, with the S&P down over 12%. Small caps are down since that period 17%. Okay. The Dow's down 11, 12%. The NASDAQ is down about 7 or 8%. Massive outperformance because of our huge cash position. So obviously every day we're looking to day trade from the long side, and we're killing it right now on these call positions. Let me also tell you, investors that are in our model portfolios for the year right now are outperforming the market by a factor of 5. We are 5 times better than what the market is doing now for the year. And it's all because we start with risk management. We use proprietary algorithms, which I share with you every day on this show and on YouTube, that you can get access to through the model portfolios. All we're doing is protecting capital when times like get ugly, and then putting the capital back out to capture that alpha. So the first step in putting capital back out is day trading from the long side when we have a huge cash position. And we're looking for days like this. So let's get to how we're handling this day trade and what it can turn into. I put out on Twitter step by step this morning what we were trying to do. I said to you, market gapped up. We bought call positions on Monday at the close. Market gapped up this morning, sold those positions for a small profit. Okay. I don't like gap ups in the morning from the long standpoint. So I sold them and just got out of those positions, booked a small profit. I was waiting for the gap closure. I wanted it to come down and test the 1 o'clock close of Monday. It did that at, looks like around 10:20. And I tweeted out a double bottom test of the 1 o'clock close on Monday. And reversal will get us long the market on a day trade / multi-day trade, depending on how it plays out. Oh my God, we're killing it. We're killing it. This is so much fun. I hope you guys are with me on this trade. Let me know if you're with me. Tweet me, send me a DM, anything. Just let me know if you're with me on this trade, because I literally put out step by step how we were doing it today. I don't normally do that on Twitter. I kind of reserve that for ARMR Report, what we call the ARMR Report alert email list. If you're on that email list, I send you out trades like this on a periodic basis. You could get onto that email list by going to our website. A little box will pop up that'll say, give us your email address. We'll send you these alerts. So I just shared with you today what these alerts look like. This was an ideal alert. At 11:06, we were putting our long S&P calls into the portfolio. At 11:06, the S&P was trading at around 235. Right now, it's 239. We were buying the 240s of January. We're up huge on them. It's a 52% move in 11:06, 12:06, what is it? Almost a little over an hour, and we're up over 50% in those calls. It doesn't get better than that, guys. But it also goes back to, look, we're not just day traders here. This is an investing philosophy. It's called the ARMR Report. It's called capturing alpha. I don't day trade every day. The alerts that you'll get from our email alert that we send out are not always day trades. Sometimes the alert will be, now's the time to put a long position on the marijuana stocks, for instance, for a multi-day hold. Or we're buying gold stocks, which we were telling you, guys who were subscribing, a couple of weeks ago. We said, now's the time to start following this space and get long this group. And you can see that on our website, the homepage. We tell you what we're focusing on, precious metals, but you get a lot more granular detail in the alerts that we send out if you sign up to our email list. So now what are we going to do with this day trade? Well, there's two ways to go about it. I mean, look, we can capture this profit right here. We're up 51%. I mean, feel free. Go sell and book your profit. But a part of me, I think what I'm going to do for my capital, I'm not really looking to just capture that 50% gain. I'm really looking to get a foothold and capture multi-day alpha. When you're outperforming the market by a factor of 5 in 2018, that is huge alpha. And so it behooves me to start putting some capital to work long, even before we get a risk-on signal. When I get a risk-on signal on those 5 indexes, I'll get aggressively long. But truth be told, the market could be up 5% off the low before I get that signal. Okay, these algorithms are not designed to day trade. They're not designed to pick the bottom. And they're also not designed to pick the top. We're always going to give a little bit away off the top, and we're going to give a little off the bottom. We're not looking to catch a falling knife. So a lot has to come together for us to get long. I don't know, we could be in cash for another month. But when the alpha is this enormous, when we're outperforming by a factor of 5 times in 2018, it just makes sense to take some of our capital. By the way, we made a lot of money in the S&P puts in the last couple of weeks. So I'm taking some of that profit and I'm rolling into the calls right near the lows of this market because of our big alpha outperformance. This is called risk management. It's money management. It's capturing alpha. This is a professional way to run money. Not a lot of people think this way. Instead you're full of fear because the market's plummeted. You don't know what to do. It's, you're afraid. But from a professional manager standpoint, I've been doing this 30 years. When I'm outperforming the market by a factor of 5, it's a win-win for me to put some capital to work. Even if I were to lose money on these calls, that'd be okay. My alpha's huge, right? But if the market rockets higher for a couple of days, I'm going to have a big profit in these positions. That's going to help capture alpha. Okay. So that's what we're doing. So just to recap, our major indexes are telling us to remain in cash and defensive for the 3 model portfolios. From an intraday standpoint, we're always looking long because we have such a big cash position. So we're trying to capture alpha. The way we do that is we look for double bottoms, reversal triggers at key locations using our algorithms. The key location today that I shared with you on Twitter was the closing price, 1 o'clock on Monday. If we got a double bottom reversal there, which we did, we were going to put capital to work. And of course, you could use that information and do whatever you want. We're buying call options. You could do whatever you want at that point. Now we have a big gain, and the way it's acting today, I wouldn't be a bit surprised to see this turn into a 2 or 3 day rally. And that's kind of why I want to stick with it. I want to see if it can make it back up to the downtrend, capture all that profit, and I'll probably start buying puts again on the market, unless our algorithms tell us different. I think we're in a long-term downtrend. I think we're in a long-term bear market. I've been saying that since really October. So the overall belief on this trading desk and what we're trying to do is we buy the bottom of the channel, and believe you me, we just blew out below the bottom of that channel. So a snapback rally would make a lot of sense. And if we got lucky, it would go all the way up to the top of the channel, and that's when we'll put a bunch of shorts back out. It doesn't always have to play out the way I hope, though, and quite frankly, it never does. So we'll see what happens, and we'll read and react. All right. I promised you I would get to the precious metals part of the show, and now we're getting to it. How do we want to handle the profits we've got in precious metals? Big breakout in silver today. That was the one metal that was not responding in this precious metals play. So gold was going up first. Then we had the gold stocks breaking out. Finally, today, silver is up over 2%. And the gold stocks are selling off a little bit because the market's rallying. So these stocks are always contrary to the market. I shouldn't say always. My dad would be upset with me for saying that. He's a big fan of the precious metals stocks and the whole space in general. He's been doing a lot of research and work on the space. So sometimes the market goes up with precious metals. But let's just say in the last 7 years, that hasn't been the case. So to a certain extent, precious metals are contrary. They're almost like a short position. And so if the market's rocketing off the lows at the moment, people have less interest in precious metals. They come down a little bit. That's okay. They're in a great uptrend since the buy opportunity of a couple of weeks ago. We've been building our positions. We got about 15% of our portfolio long precious metals. Some of that is directly in owning the physical gold and silver. We like to do that with the ETF, which is the symbol CEF, Charlie Echo Foxtrot. It actually owns physical gold and silver. It's trading at a discount to its NAV, which is shocking to me because it's real metal. So that's a gift. That discount will close quick if this buy signal is for real and the 7-year bear market is over. That discount will go to a premium in a bull market. So we got some positions there. We got some GDX, which is obviously the ETF of the big cap precious metals companies. Gulf, Delta, X-Ray, GDF. One of my favorite big cap stocks in the space is Royal Gold, RGLD. It just seems like that's where institutions like to go the best. It's highest margin. All of its earnings revenue comes in from royalties. So royalty plays seem to perform better than the rest of the space. And then we have a couple of smaller names I can't share with you. We're accumulating them right now, and they're too small for me to share on this show. I don't want to affect how they do. But investors with us will be long those positions. Anybody who's linked to our model portfolios have those couple of the smaller names in their portfolio as well. So what do we do? Do we think this is the start of a bull market? Do we think the 7-year bear is over? Well, I put up some charts last week. You can go look at the Twitter feed, hashtag ARMR Report. You'll see GDX. You'll see gold, GLD. It has broken a multi-year downtrend, and it's broken the third downtrend. And anybody who follows Fibonacci sequences knows that you need 3 downtrends to be broken on a long-term trend for a change of trend direction to begin. And that's happened. If you go back to the tops of 2012 and you build your Fibonacci sequences, you'll see that we broke out above that third line in February of this year. Then we came back and tested it, and now we're coming out again. So it looks like a real change in trend has occurred. Our algorithms are telling us to be long these assets here. So at this point, we'll raise our stop. We'll look for a break-even type of stop now at this point because the assets have risen up. But I don't want to be penny wise and pound foolish, right? So don't have your stops too tight. These things can swing dramatically. So you got to give these a little bit of a bigger stop. And if you don't like that, then take a smaller position size. Don't mess with your stop. Just if you feel like that's too much risk, then take a smaller position size. So I guess the answer to the question is we're not just selling these stocks today because they're up. I think that the move in silver today is confirmation that we could be getting a real move higher in these assets. I think any weakness that occurs in the next couple of days because the general equity market bounces is an opportunity to put those positions on if you haven't done them already. And then let's sit back and see what happens. But it's the only place we have capital long in the market today. Okay, so just to wrap up, big algorithms tell us risk off still. So if you have a big cash position, just sit tight and enjoy the cash. You don't have to get the bottom. Don't worry about that. We're outperforming here for the year for our clients by a factor of 5 times. You could see just in the last month, we're outperforming by a factor of 4. So by protecting capital in a massive downward trending market, we will dramatically outperform buy and hold investors. I like to call them buy and hope investors. There's no reason to invest like that anymore. Your dad used to invest like that and it worked. You had normal cycles. You buy and hold for a long time. In the world we live in today, your assets will be destroyed in a passive buy and hope mentality. Right now, if you're a buy and hoper, your hope is pinned on the fact that the Fed might change their stance and start adding liquidity. Good luck with that. Good luck with that. Passive investing is dead. Until the bottom of the next massive financial crisis. Don't mistake central bank intervention and liquidity adding at the bottom of financial crisis with your smart buy and hold strategy. That's not smart. Don't let your gains get wiped out because you think that's the way to always invest. It's not. If the Fed is reducing liquidity and the ECB is reducing liquidity, the European Central Bank, and the Japanese central banks reducing liquidity, you get a bear market. Why sit through that? At the very least, raise some cash. Use the ARMR report to help you out with that. I'm here to help you. You're here to help me. Every day I do this, it keeps me on track, make sure I execute correctly. So thank you for joining me. I look forward to talking to you again tomorrow. Be safe out there. If you have any questions, you can always direct message me on Twitter, #ARMR Report at Brett Rosenthal, 1T, BRET. You can send me a question through our website, rosenthalcapital.com. All right, guys, I'll talk to you tomorrow. Good luck out there.